Hello everyone, welcome to episode 38 of the GrowCast Show. I'm Zed, your host for today, and our guest in the studio today, Jack Chia. He is a senior financial consultant, and we are very excited to start our chat with him today. Jack, thanks for coming today, and how are you feeling?
Hi Zed, how are you? Yeah, I'm good.
Good. Excited to start the show?
Yes, let's go.
Right, okay, let's do it. Okay, question number one. What does being better than normal mean to you?
No, being better than normal is just simply put being better than today. So whatever achievements you have today, whatever you've done today, always strive to be better tomorrow.
What makes you better than normal?
What makes me better than normal? I just want to learn. I just want to improve, and yeah, that's generally what I feel. What makes me better than normal? Is to never stop learning and never stop growing.
How did you get started in the financial advisory field?
So my background wise, I have an electrical degree in engineering. Then I was an electrical engineer, a service engineer for a couple of years. Went on to be a sales engineer, account manager. So I did that for almost 10 years. I also got my master's degree. And unfortunately, I lost my job at one point in time. So my friend who saw me, he saw some potential in me, and he told me to join him. Yeah, and that's where I am now.
Oh, good. That's nice. What skills from being a sales engineer were you able to transfer to the financial advisory world?
No, I'm an engineer at heart. So I'm more of a mathematical person. I'm more of a logical kind of person. So when it comes to financial planning that I do, I also like to take a more mathematical approach to make things simple for my clients, easy to understand, something that is easy to implement. And also at the end of the day is to ensure that they do not then overspend or overbuy in that sense.
Oh, interesting. So what inspired you to become a financial advisor?
So this one is fairly recent. Like I said, I lost my job, so I was jobless for 6 months. And it just so happens during that time, on that very month that I lost my job, I collected my keys to my BDO. To my HDB. Yeah. So as you know, no job for 6 months, and renovation started. You have to started paying stuff. So I was just bleeding money at that time. And it just so happens that, as I was going through my finances, I realized that the plans that I've bought years before when I started working 10 years ago, they had money in there. Yeah, it may not be a lot because I didn't put a lot at first, but it's still quite a lump sum, and it still helped me tide me through the whole phase when I was jobless. So yeah, that's why I feel that proper savings, proper financial planning, even if it's just a little bit of money, it goes a long way. And when you really need money and when you really need finances, you realize that actually you do have something somewhere.
That's quite a story there. Okay. So how would you describe your philosophy when it comes to financial planning?
My philosophy is, I would like to help my clients to transform their fairy tales into reality.
Okay.
Whatever their fairy tales may be. So whether it's a happy ever after, or they want to live life to the fullest, or they want to see the world, and so on and so forth. So my job is always to help them, to give them that peace of mind, and to allow them to do what they want to do.
I see. That's good. What sets your advisory services apart from others in the industry?
Like I said, I'm a more mathematical person, so I tend to have a very mathematical way of doing things. So be it your insurance coverages, your critical illness, your retirement, everything, it's all, I'll map it out for you in a more mathematical way, certain number of times, 10 times, 5 times, whatever. And yeah, we'll work towards that goal, and I'll make sure that I'll give you the best plan that I can, the best policies that I can, the best advice I can based on that. So it's something that's easy to understand. It's not so easily forgettable. Yeah.
Okay, that's good. What type of clientele has benefited most from your advisory services?
For me, it could be because of my age, it could be because of my background, but generally the people that I work with the most in terms of my clients are foreigners and Singaporeans, and mostly in the engineering field space. And some people around 30s, 40s in most cases, somewhere around close to my age. And I'm not sure why, but perhaps because I connect with them better. As an engineer myself, I understand their pain, and of course the age is also plays a part.
I see. That's good. What do you enjoy most about helping expat families plan for their financial futures in Singapore?
I've worked with a lot of them over my years as an engineer. So I've worked with them. They are great people. I've seen how they struggle. The things are expensive in Singapore. So yeah, I would like to then also help them to do better while they're here. Yeah.
Tell us more. Care to elaborate on that?
Yeah, so as you know, from foreigners in Singapore, they have to pay rental and they have high costs. Medical costs are more expensive for them. If their kids are here, education cost is also more expensive. So yeah, that's what I like to do. I want to be able to help them and to be able to help them to have a good life while they are working here in Singapore.
Why do you feel that it's important for expat to look into financial planning in Singapore?
Like I said, expats in Singapore have very high costs. Rental is very expensive and it's constantly going up. Education as well. Medical, they don't get the subsidies that we do. So yeah, it's even more important. So yeah, for them to do their financial planning, because you never know when the permits may end. You never know when they might suddenly have to leave and all that. So you want to make sure that their expat families, their finances are all properly done up, so that in times of need, then you're able to tide things through.
Cool. Okay, so how is financial planning for expats different from financial planning for Singaporeans?
In a nutshell, generally it's still the same, but of course you have to take into consideration more when it comes to expats is the subsidies that they get. Education is, like I said, education is more expensive for them. Medical is more expensive for them, so they need to be able to have more cash on hand, so more savings to grow more, so that they can use it in times of need.
Are you bothered by the stigma associated with being a financial advisor?
No, yeah. So I'm sure we're all well aware of the stigma, but no, I'm not bothered by it, because at the end of the day, what we do, we help people. All right, we know that the things that we put in place, yes, some people do have their gripes about it, but I myself, personally, I've been through it, so I know the importance of it, and I know that what I do is helping them in the long run.
Can you walk us through your typical process when working with a new client, from initial consultation to ongoing support?
So generally, when I meet a client, I first get to know them, and I think that's the most important thing, is to get to know them. They have to understand their pains, their financial situations. Is in terms of for foreigners, of course, if you have your family here, is it back home? Do you have anything else going on in any other countries? For Singaporeans, definitely is that how many kids do you have? Are you looking after your parents? That kind of thing. So get to know them better. You get to understand their entire situation and slowly plan things out. Work with them on their budget to see what best suits them, what's their needs. Sometimes due to budget constraints and family commitments, people may not be able to go in and do the big stuff. So it's also a work in progress. It's something that I work through with them throughout the years as they progress through life, and we'll just look into it, slowly increase whatever needs to increase if there's any need. And yeah, so there's this constant follow-ups, constant feedbacks and updates.
The average salary of a university graduate in Singapore is 4,313 in 2023. Do you feel this is enough?
My starting salary was 3,006, so could be, but that was 10 years ago. So things are getting more expensive anyway, so definitely whether it's enough or not enough, it's really down to how much you spend and how disciplined you are. But it is what it is. That is something that I can't change, you can't change. So what I can do to help is that, of course, I can help you to look through everything and give clients the peace of mind to know that some aspects of your life is still well taken care of, whether or not you feel that that average of 4,000 plus is enough or not enough.
Do we really need life insurance?
Personally, no. Yeah. So life insurance is a payout upon death, so we won't see the money. The question that we should be asking ourselves is, do our families do our loved ones need the money? Do you have a house to pay? Are you looking after your elderly parents? Do you have young kids that still rely on you? If the answer is yes, then yes, you do need life insurance, because that is the protection that you give and the peace of mind that you give to your loved ones, to know that if anything were to happen to us, they are well taken care of.
How does a person know that they have enough insurance?
So back to the way I do my thing. So it's a more mathematical approach. So let's say, for example, if you have married with kids and all that, usually I would recommend, let's say, 10 times your annual salary. So assuming that you make 5,000 a month, right? So that's about 60,000 a year. 10 times 600,000. So ideally, your coverage for life insurance should be roughly about 600,000. If you have more than that, that is great. You know, there are people who have 1 million, 2 million kind of coverage, which is very good. But then if you're able to afford it, that is great. But I've seen people who are in that situation. They have 1 million, 2 million coverage on life, but then they have only like 100,000 on critical illness, that kind of thing. So could you then possibly be having too much life insurance then in that case, right? Or if some people are paying a lot and they are feeling that, you know, they are paying too much and yet they have very big coverages, which is great, like I said, but then your daily life is that you're struggling. So could it be then that maybe we can look to reduce something to give you a bit more cash flow on your hand? Or is there something else that we can do instead of just focusing on life insurance or whichever particular insurance that you might have an excess of?
In your opinion, what are the most important factors to consider when planning for critical illness coverage in Singapore?
Most important factors: budget, health, and age. Yeah, so these things are the three things that dictate your critical illness coverage.
Budget, health, and age.
Yes.
That's good. What advice would you give to someone who's just starting to think about critical illness coverage for themselves and their family?
Come talk to me. But in all honesty, start early and do whatever you are able to afford. Because with critical illness, you know, like I said, the three things: budget, health, and age. But the truth is, the biggest most important factor is health, right? So get it when you're younger, when you're healthy, and that's where you can get the best coverage at the best price. There are people who have medical problems, medical history. Even if you are willing to pay 3-4 times or whatever your premium is, you may not even be able to get insured, and that's the truth. Yeah.
What is an investment linked policy or ILP?
An investment-linked policy is basically your investment plan. You know, they invest in mutual funds, and then of course there are a bit of insurance components to it. Yeah, so that's basically what an ILP is. There are some misconceptions about ILPs. People tend to think that, you know, the returns are not good enough or the fees are too high. But then you have to understand that an ILP is meant to be a long-term savings with a slightly higher returns compared to maybe your traditional savings plans and whatnot. It's not meant to be like you go buy Apple stock and then the next day it jumps up by 20%, or you buy crypto and then it goes up by 1,000%. That's not what an ILP is meant to do. Yeah, it's meant to give you that steady kind of savings with a slightly higher return.
Do ILPs provide diversification?
Yes, of course. So ILPs, they invest into mutual funds, like I said. So then mutual funds, it's over varied industries, countries, and with different kind of components to it. You know, some is high risk equities, some are into bonds, and some give you dividends. So it's a wide range of funds that you can then tailor to give you that kind of diversification.
What is the probability of losing money in the stock market in the long run?
There is always that chance, as with any kind of investment. But in the stock market, in terms of historical data, right, and it generally grows on average of 10% based on the S&P 500. So if we're looking at that kind of long term, yes, then it will still grow. The chances of losing money, it's lower, but it's not zero.
What is the number one most important trait of a successful investor?
Discipline. Yeah. So you have to be able to put in money regularly, and you have to be able to know that sometimes when to put in, when to take out, and of course you have to know. Yeah, so you just have to be able to block out noise in that sense, right? Block out noise and block out things that are coming into you, and just be disciplined to save in the long term.
What does noise mean when investing?
Noise is generally what you hear from people, your friends, your family. They might tell you, oh no, this is going up, this is going down, war's coming. Or what you see on the news, you know, or even social media. There are a lot of people on social media telling you, to invest in this stock, invest in that stock, right? It may be true, it may not be true. We don't know. So the best thing to do is just to dollar cost averaging and slowly put it in and just let the market do its work instead of oh no, this is not gonna work, so I'm gonna sell. Or this looks good, I'm gonna buy, and then it's just very messy.
When it comes to children education, what strategies do you typically recommend to your clients?
Start early and know what you're planning for. So when it comes to children education, right? We don't have a very long time to go. Kids grow up fast. So start as early as possible so that you can grow as much as you can. And plan for best case scenarios. And what I mean by best case scenarios is always try to plan for the most expensive stuff, right? Let's say, for example, medical doctor, right? Yeah, not everyone's going to go there. But if your child were to suddenly grow up and realize, I can become a medical doctor, or I want to become a medical doctor, do you have the funds for it? If you plan early and you plan for it, yes. If they don't become a medical doctor, they do something else, there's still extra funds, and no one's going to say no to more money, right? And that money can then go to helping them to do whatever they want to do, whether it's for their future, for their own starting a business and whatnot. So yeah, always plan for the best case scenario and start early.
What are 3 mistakes parents make when saving for their children's education?
Not starting early enough, not planning for the actual amount. They don't know how much they need, and of course thinking that their CPF is enough to cover.
What strategies do you recommend for parents who are starting to plan for their child's education only when they are in primary or secondary school?
So when you're in, let's say, primary or secondary school, you've lost a couple of years in front, but that's fine. We can still work to grow your money as fast as possible, as quick as possible, so that when they are in university, even if you cannot cover 100%, right, we may be able to cover 50%, and at the same time, your money can still continue to grow after that, so that they can still use that money after that. So it's not say that we start at point A and end at point B, and then do we have enough at point B, right? So we may not have enough. We take what we can, and then we let it continue to run, so that in point C, point D, in their life after university, they can still use the money.
Is retirement planning compulsory?
Yes. Yeah. You can be the healthiest person in the world, eat right, exercise very well. You live the right old age of 100, right? And you're very healthy, you don't get any kind of critical illness, you don't get sick. But we all will grow old. And unless you plan to work till you're age 100, we will retire. I'm sure we all want to retire. So yes, retirement planning is one of the most important things actually.
What are some common mistakes Singaporeans make when planning for retirement? And how do you help them avoid these pitfalls?
So the common mistakes that a lot of people I see is that, one, they don't know how much they need to retire. They don't know when they want to retire. And they are just blindly saving money. And sometimes they just put more money in the bank, do a little bit of this, that, a little bit of that. But generally, they're just blindly just putting money aside. Yeah.
How much does an average Singaporeans need for retirement?
On average, let's say for us, for example, let's say if you were to retire age 65, as most of us would think about retiring age 65, and in order to live comfortably in retirement, roughly about 1.5 to 2 million on average, to assuming that your house is paid for, your kids are all working, they don't need you. So generally about 1.5 to 2 million. So it branches out between monthly kind of payments and of course lump sum stuff.
How do you help clients determine their retirement goals and develop a plan to achieve them?
So the first question I always ask my clients is, if you were to retire tomorrow and you have no more major commitments, your house is paid up, your kids are all working, how much do you need to then retire and live that comfortable life? To do what you want, to not have to worry about money, to travel if you want to. How much do you need a month? And then from there, people, they will think about it, and then from there we will work towards that kind of amount. Yeah.
What are 3 key factors to consider when planning for retirement in Singapore?
3 key factors, like I said previously, when you want to retire, how much you want to retire with, and what do you want to do? Do you have any goals in your retirement? Do you have any big plans that you want to do? The things that you've never done before? Or do you want to just travel the world? Yeah, that kind of stuff.
Can you share some strategies for generating passive income streams to support different different retirement lifestyles?
There are a lot of ways to have passive income. All right. You can build a big, large sum of money and then slowly draw down. Or like there's a lot of plans, financial plans out there that have give you fixed payment savings, and then at a certain age they'll slowly pay you out the money. Or you can go investment route and do dividends. Right? They give you regular payments upon your retirement. There's quite a number of ways that we can work around with and tailor it to people's individual budgets, their risk tolerance, and how much they want.
Which is better for retirees? A lump sum of money withdrawn at 65 or monthly payout after 65?
Bit of both. Yeah. So monthly payout, we've all been working for a lot of our lives where we are used to having that salary coming in. So to suddenly realize that zero every month at 165, it's a hard pill to swallow. So we built it such a way that, for clients after 65, when you decide to retire, you get some money every month for you to sustain your day-to-day life. And at the same time, we built a lump sum amount as well, so that you can do whatever you want to do. Maybe you want to finally decide that you want to start that small little business for yourself, or if you decide that you want to travel the world, you still have that lump sum of money, and then you can just do whatever you want.
Who are you currently looking to serve in your advisory service?
Foreigners, Singaporeans in the engineering space, engineers and all that. People in their 30s and 40s. Yeah, these are the kind of clients that I generally like to work with.
Okay. Thank you, Jack, for the answers. Okay, everybody. We've come to the end of episode 38 of our GrowCast Show. I would like to thank Jack again for being here today for this episode, and we look forward to seeing you at episode 39. Take care, everyone.